Ladies and gentlemen, good day, and welcome to the Aeroflex Industries Limited Q1 FY25 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all the participants' line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Asad Daud, Managing Director of Aeroflex Industries Limited. Thank you, and over to you, sir.
Thank you so much. Good morning to everyone. I'm pleased to welcome you all to our Q1 FY25 earnings call. Joining me are the members of our management team and SGA, our investor relation advisors. I trust that you have had a chance to review our financial results and investor presentation available on both the stock exchange platform and our company website. At Aeroflex, dedication to sustainability and responsible practices drives our innovation. We are focused on transforming traditional flow solutions with products that not only enhance the performance but also deliver sustainable environmental benefits. With a portfolio of now more than 2,300 SKUs and more than 70 products in various stages of development, we continue to advance engineering flexibility and provide innovative solutions to our customers. This quarter, we began the commercialization of some of the products, which includes copper tube assemblies, brass tube assemblies, heat pump hoses, and high pressure DN100 solutions for some of our most prominent clients. And we have also initiated R&D on fire sprinkler assemblies. At Aeroflex, we serve a diverse array of industries. Our products are engineered to excel under the most challenging conditions, guaranteeing unmatched reliability and efficiency across a wide range of applications. This quarter, we have experienced strong traction from our end user industries. While we encountered minor supply chain disruptions, these generally have not affected our demand significantly. We are also actively looking at our footprint in the emerging sectors such as electric mobility, aerospace, firefighting, and semiconductors. By harnessing our cutting-edge engineering capabilities and innovative products, we are well positioned to seize substantial opportunities in these fast evolving markets. Now, talking about our performance for Q1, we had a record-breaking quarter for our company. We achieved our highest quarterly revenue, which stood at 90 crores, which marks an 8% increase on a Y-on-Y basis and a 15% increase on a quarter-on-quarter basis. A record-breaking quarter would have been even better if it wasn't for the delays in the container availability due to the ongoing crisis in the Middle East, and also due to some constraints that we have faced in the capacity of our assembly department. These two factors have impacted our revenue by 9%, which amounts to an approximate value of 8.2 crores for the quarter. Despite the higher volume of orders for our assembly division, the ramp up of our assembly section could not keep up with the demand that we are getting for the assembly business. I guess this is a good problem to have. We are working on adding more assembly stations to increase our assembly capacity. We have also placed order for an automatic welding machine, which will help us to reduce the manual intervention and to also reduce the lead time. We achieved our highest ever EBITDA, which stood at 19.13 crores, reflecting a 13% increase on a year-on-year basis and a 21% increase on a quarter-on-quarter basis. It is important to note that despite our record margins, our EBITDA would have been even higher if it wasn't for the sharp rise in the shipping cost, which amounts to approximately rupees 81 lakhs, as well as other non-capitalizable expenses related to our ongoing projects, which amounts to approximately 1.13 crores. If we consider both these factors, then the total amount would be 1.92 crores, and our EBITDA margins would have been higher by more than 200 basis points. Our profit after tax for the quarter stood at a record 12.41 crores, with a growth of 12% on a year-on-year basis and a growth of 24% on a quarter-on-quarter basis. For Q1 FY25, our production volume reached 3.09 million meters. Our production volume would also have been higher if we had not faced the constraints that we have faced in the assembly section. We are confident that with the new assembly stations that we have planned and the new automatic building machine, which is scheduled to be received in the second half of this financial year, I'm sure we'll be able to increase our production significantly. Now talking about the segment highlights, the flexible hose segment. This segment remains to be our major contribution towards our revenue, and it contributes about 55% to our Q1 revenue. This shows that there is a rising demand for metallic flexible flow solutions in the world. The assembly and fittings business generated or contributed about 36% of our revenue for this quarter. And like I said, if it wasn't for the assembly section, constraints of capacity, I think this percentage would have been even higher. And the other segments like braiding, interlock hose and composite hose, it accounts for approximately 9% of our overall revenue. Now, talking about our acquisition, we completed the acquisition of Hyder Engineering Private Limited in April 2024. We acquired the company for 17.21 crores, which was financed through a mix of internal accruals and IPO proceeds. This marks a significant milestone in our expansion journey, allowing us to offer a comprehensive range of solutions from hoses and fittings to complete assemblies. Additionally, we are planning to invest approximately rupees 18 crores for upgrading the facilities and the machines at Hyder, which includes also the installation of a brand new high-tech quality lab, and also the procurement of new machineries which have the latest technologies. We are on track to be fully market ready in Hyder by March of 2025, with the full impact of these investments expected to be reflected in the next financial year. We are also pleased to announce the successful expansion of our hose capacity by 1.5 million meters, which leads to an increase of our total capacity to 15 million meters per annum as of August 2024. The remaining 1.5 million meters per annum of capacity is scheduled to be completed by the end of the third quarter. Now talking about our assemblies and fittings, so we have introduced 5 new stations in the assemblies and fittings, which leads to our total assembly stations of 34. And like I said, that we are in the process of adding more assembly stations and automated welding machines to to enhance our efficiency and also to reduce our dependency on manual labor. Uh, Talking about our metal bellows and expansion project, the project is progressing as planned, and the first phase of our capacity should be completed by December of this year. We have already received some of the machineries and the additional equipment, and we expect that the remaining machines and the equipment would be received by September or October. And we expect the production to commence from December, the commercial production to commence from December. Our strategic vision is to expand our portfolio and capitalize on opportunities across the diverse industrial segments. In the future, we are committed to innovation and product development, enhancing our capabilities to serve a wide range of industries and reinforce our position in the flexible flow solutions. We are also focused on expanding our presence across the globe by establishing strategic delivery locations and broadening our product range. We aim to provide efficient and integrated solutions to our customers. In addition, we also plan to explore to enter into manufacturing of flexible flow solutions using high-end materials such as bronze, PTFE, and Inconel, while we also plan to enhance our design and R&D team. With our full capacities set to come into production by the year end and our recent inorganic acquisition, we remain confident in achieving our targets for this financial year. Our confidence is also bolstered by the impressive growth rates of some of our competitors in the US, especially Parker and Eaton, which shows the robust potential of our industry. We are highly optimistic about the next few decades, given the strong growth trajectory and the emerging opportunities that is present in our industry. With our extensive experience and strategic vision, we are well positioned to capitalize on these trends and drive significant progress. This long-term perspective reaffirms our belief in the vast opportunities ahead and our commitment to leading the way in this high-growth sector. With this, I would like to conclude my presentation and open the floors for Q&A. Thank you so much, everyone.
Thank you very much. We will now begin the question and answer session. Participants present on the audio bridge who wish to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manan Vandur from Wallfort PMS. Please go ahead.
Thank you so much for the opportunity and congratulations on the numbers. I just had a few questions. So I just wanted to understand what will be our EBITDA margins for the metal bellows segment once it is like fully ramped up and all, like the whole 300,000 capacity thing.
Okay. So, the EBITDA margins, I will tell you about the phase one, which is already under commissioning. So once the phase one is fully completed and the production is, up and running, at an optimum capacity level, the EBITDA margin for metal bellows should range anywhere in the region of 26 to 30% on an average. And
Okay.
after phase two, depending on the size of the bellows that we make, it could be even higher.
Okay. Understood. Thank you. And I also wanted to understand that, even as we are going to our metal bellows, do we already have inroads with some of our clients? Like, are we in talks or like we already, have secured some of them? Like, can you name some of them?
So unfortunately, I will not want to name any of our clients on, on such a call. But I will say that we have already started. So we have already started working with our customers since the past 2 months. We have started to work on the designs of the bellows that they require, because these bellows are not like they're not like a commodity product where you can just start manufacturing and selling. So it requires a lot of working with the customer. So we have already started work on that. We have already in talks with 2-3 of our major customers to develop bellows for them. As soon as we are capable to start manufacturing them. So all the background work, or I would say the back end work with regards to the bellows marketing has already started.
Okay, that's really helpful. I just have one more question. Even as we have done our acquisition on the header side, do you think like our revenue share will be more on the domestic because we are now focusing on defense clients and everything? And have we secured like some clients in this also, because you have named some in the PPT? So wanted to understand on that part as well.
Yeah. So in terms of the defense sector, we are, right now not supplying directly to the defense sector, but we are supplying to the tier one suppliers who are then ultimately using our products, in their machinery and then supplying it to the defense sector. With regards to our domestic business, so domestic business right now contributes about, approximately 18% to our overall business. And we expect that the domestic business will continue to grow, at a very rapid pace, maybe even at a faster pace as compared to the export market, because we have, so we are investing significantly in ramping up our domestic sales team as well. And, we can expect the fruit for the domestic, business to be seen in the next few quarters. So the work has already begun on that.
Okay. And are we in talks with some of the clients that you have named?
Yes. So we are already in talks with some of them. We have received, some trial POs also from some of them, to develop certain products, for them.
Okay. And a very last question, if I can squeeze in. I just wanted to understand that even as we have these 3 different assembly things now, like for example, we have hose assembly, and then we'll also have metal bellows. So let's say, like 3 years from now, and we run at our optimum capacity for all 3 of them. What can be our optimum, revenue potential, at peak revenues we can generate from the 3 of these?
So, our ultimate aim, like I've been telling in my previous, calls also, that over the next, 4 to 5 years, our aim is to, to have a total sales of about 1,000 crores, over the next 4 to 5 years. So that would price of bellows, hoses, composite hoses, fittings, assemblies, and a whole set of new products as well. So that's our aim over the next 4 to 5 years.
Okay. Would that consider even the header acquisition?
Yeah. Yes, that's a part of because that's right now, part of the company.
Correct. Okay. Thank you. Okay. That's it from my side. Thank you so much.
Thank you.
Thank you very much. The next question is from the line of Varun Mohan Raj from Carnarvon Capital. Please go ahead.
Good morning, and thank you for the opportunity. So in the previous call, we've spoken about increasing our fittings revenues from the current mix of around 33% to 60 to 70% in next 3 to 4 years. So this would be fueled by the metal bellow capex which we're doing. I mean, the phase 1 plus phase 2 together can give us 60% overall revenue from the fittings business, or should we also do further capex on the fittings and assembly business? Thank you.
Yep. Thank you so much for the question. So metal bellows, as a product is the difference from the assembly product. So when we talk about the assembly product, we're talking about converting the hose into the assembly. So it's not, So bellows, the revenue of bellows would be different and the revenue of assembly is different. So when we talk about, we expect to have about 60% of our sales over the next 3 to 4 years from assembly. So that does not include the bellows part, because the bellows is a completely different, product.
Okay. So like when you said in 3-4 years, you'll have this revenue mix. So, what would be the rough revenue mix like, if you can help us understand, like?
So just to explain that, so when we talk about like 60% of the business would come from the assembly. So what we mean is that, say for example, if the entire the metal hose division, if it contributes 100 rupees of revenue, so out of that 60 would come from the assemblies and then 40 would come from selling just the hose. And the bellows is the difference. So we have not counted that as part of the assembly.
Okay. Thanks for that. It's clear now. And a slightly longer term question, like we currently have around 2,300 SKUs. So we've talked about one of our large NMC competitor, probably in the West, who has like 50,000 to 60,000 SKUs. So since we are in the growth phase, probably for this whole decade, so like maybe in 5 years or 5 to 10 years down the line, how many SKUs can we be, get to from here?
So, we, ultimate our aim would be to cross in the long run to 50,000, but obviously that's a long way. It's part of an extremely long-term plan. But at 50 to 60,000 SKUs, one of the competitors of UK, they are doing $20 billion in annual sales. So you can just imagine the scope or the potential for our business in the next few decades, where if we can reach to that scale, we would probably be one of the top companies in the world, in a particular industry, as in like a wider range of industry. So the potential is enormous, because we have there are 2-3 large companies in the world who are in our business and who obviously have a huge range of products, and we can see that with that range there is a huge potential for the market in the market side.
Okay, so can we assume that the number of SKU growth would be similar to a company growth rate, like 25% growth in SKUs also, or SKUs can grow faster than the revenue growth?
So, in a sense per se, we, honestly, we don't have any specific targets to grow our SKU, like for example, that we want to grow our SKU by 20% or 50% or something like that. It's just that, as our business grows, by default, the SKUs would grow. Now, it may grow at 20%, it may grow at 10%, or it may grow at 50%. It will be hard to give you a number in terms of the SKU growth, because a lot can happen where we develop a new, like a new product, and it could be used in a wide variety of industries. So the sales of that particular product could be extremely high. So but yeah, obviously as our company grows, as we move up into the ladder chain, I'm sure the number of SKUs is going to grow.
Okay, thank you. And my last question. So we've spoken about 1,000 crore revenue aspirational target to the previous participant. So when we achieve 1,000 crores, what would be the revenue contribution from the new age sectors like solar, EV, and robotics, which we talked about? And does this new age sector have a higher margin potential compared to our other conventional sectors? So this would be my last question. Thank you.
So yeah. So in terms of margins, obviously, as we move into the new industrial, sectors, they obviously have better margin as compared to the traditional sectors. But what we are also doing is through our design and engineering team, that we are also working on certain new products for our traditional sectors also, which can help us to increase our margins even in our traditional sector. So obviously the new sectors have better margins, but we are also working on some design changes for the products which will help us our margins in the traditional business. Now in terms of the split, we expect that over the next 4 to 5 years, I think the new sectors would contribute more than 50% to our overall business.
Okay. That was great. Thank you for answering my questions.
Thank you.
Thank you. Ladies and gentlemen, before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Mahesh Bendre from LIC Mutual Fund. Please go ahead.
Good morning, sir. Thank you so much for the opportunity. Sir, I joined a bit late, but what was the volume growth reported during this quarter?
Yep. Thank you, Mahesh. So our production volume in this quarter was approximately 3.09 million meters, for this quarter. If you talk about on a quarter, it's more or less the same. As I mentioned in my call, that our production in this quarter would have been higher if not for the constraints that we face in our assembly sections. So because of we received a lot of orders for our assembly, but we were not able to ramp up the capacity in the assembly stations, at the same pace at which we receive the demand. Now the thing is that the assembly business is a very critical aspect where it requires welding, manpower, and the welding skills required are different from your traditional welders. Hence, for any new welders who are onboarded, they undergo 1 to 1.5 months of training to increase our, for them to be capable to weld our products. And hence, we already increased approximately 5 stations, in the last quarter, and we are planning to expand more in this quarter and the upcoming quarters. We are also placed order for an automated welding machine, which will be the first in India for our industry, wherein the manual intervention required by a manual vendor would significantly be reduced, which will also help us to enhance our efficiency and to also enhance our production. And I think once that is operationalized, I think we'll be able to see much higher production in our assembly division. And if you see in terms of the capacity utilization, it remains at around 88 to 90% for the last quarter. And the increase in capacity of 1.5 millimeters was completed in the first week of August. So the impact of that would be seen in this quarter result.
So, sir, coming quarter should be good. I mean, in terms of capacity is expanding, and the bottlenecks that we had faced the last quarter won't be there.
So if you had to talk about the last quarter, our last quarter was a record quarter. Like we had record sales, record profits for the company ever. And despite these challenges, we had a record quarter. So for this current quarter, we expect it to be better than the last quarter. Obviously, the welding issues will not be solved like immediately. It will be only solved in the over a period of the next few quarters, wherein once we get the automated welding machines, I think those will be able to help us to ramp our production significantly, because we as a company also wants to reduce our dependency on manual welders, because the plan we have to scale up the production of assembly business. I think we are committed to going into automation for those particular sections, because the scale that we aim to go at, I think without automation, it would be difficult to reach that scale. So we have already placed those machines. So once the first machine is operationalized and fully into production, I think we will be placing orders for much more of those machines. So those machines are imported from Europe, just to let everyone know.
Sure. And sir, in terms of if I have to look for next 2-3 years, is it fair to assume we will able to grow 15-20% in terms of volume on like-to-like basis?
Yes, I think that's most definitely. I think our aim is to grow, higher than that, but that is definitely achievable.
Okay, sure. Thank you so much, sir.
Thank you.
Thank you very much. The next question is from the line of Ravi Shah from Opal Securities. Please go ahead.
Yeah. Hi, sir. Sir, I had two questions. So first will be on the raw material side. So my question would be, despite the higher freight charges, and we being a raw material importer, how are we managing our costs? So it has come down significantly on a YOY basis. So could you explain that inconsistency?
So like I said, our raw material, cost. So we do both imported raw material. So we buy both imported raw material and raw material from the domestic market. So our dependency on import has reduced slightly, which also has led us to better margins in terms of our material consumed. Plus also what is happening is our design team is constantly working on re-engineering the product. So that helps us to give the same product to the customer at the same price that he wants, but at better margins for us. So that has also helped us to reduce our cost of material consumed. Plus also that we have done certain improvements in our production systems, also in our procurement systems, which has helped us to reduce our raw material both cost and also our raw material inventory. On the other side is our inventory of the finished goods has slightly increased on account of these the issues being faced because of these containers not being available in the market, and due to the increased shipping time from India to Europe and to the USA.
Understood, sir. Thank you for such a detailed answer. So my second question would be, as majority of our revenue is right now coming from US and European markets, so what kind of growth are we expecting over the, let's say, 2 to 3 year period going forward? And given this backdrop, our recent acquisition as well, so given this acquisition, what kind of volume numbers or growth are we expecting from this region coming forward?
So USA and Europe will continue to be our biggest markets. They, because of the demand, in those countries, and because of the potential also of those countries, they will remain to be our biggest market. I would say that, even though our industry overall on an annual basis might be growing at about 5 to 6%, but if you see our growth over the last 4 to 5 years, we have been growing at about 25 to 30%, and we would want to continue that momentum over the next 2 to 3 years, despite the entire market only growing at 6%, because we feel that with the advantages that we have in terms of our quality, in terms of our delivery times, in terms of our product pricing also, the cost benefit that we give to our customers, I think we'll be able to grow at the same rate over the next 2 to 3 years. In terms of the acquisition, so Hyder was predominantly selling only in India. So once our capex for Hyder, so in terms of the machines required to export the fittings to the foreign countries, so we have already placed the orders for those machines. So once they are operationalized and they are into production, I think we'll be able to export a lot of the fittings even to our existing customers in USA and Europe. But that would only happen, probably in the next financial year.
Sorry, understood, sir. Thank you for this detailed answer, sir, and all the best for the future.
Thank you so much. Thank you.
Thank you very much. The next question will be from the line of Deepesh Kashyap from Invesco Mutual Fund. Please go ahead.
Yeah, hi, sir. Thanks for taking my questions. Sir, the number that you gave, right, 3.09 million meters, that is the production number or the sales number for the quarter?
Production number for the quarter.
So sales will be similar, or what will be that number?
So we actually don't, so we don't focus on so these production numbers were, we started to give since the last few quarters because a lot of the investors have demanded. So we, like I said, because of the sales, our business is like, we actually don't sell in meters. Like 54% of our sales, is in meter. But if you see, 46% of our sales are not in meters. And hence we don't, actively track the number of meters sold. We rather work on the total value of sales and obviously the value of the margins in terms of, the EBITDA or the profit that we have received.
No,
Numbers, but just to update to the investors in terms of our capacity utilization, what has been happening. So that was on investors' request.
No, so I got it. So understood. So basically, if you say, like, if you produce 1 million meters of hose, and if you sell it directly as a hose, or you basically add an assembly or a fitting to it, and you sell it as a product, so that will add to your realization, right? But the underlying volume will be the similar volume, right? So if you because that is dependent on the capacity. So if you can give that number, then we can understand कि कितना आपने assembly बेचा. So that will reflect in your realization, right, or not?
Assembly is so the assembly production is actually calculated on the basis of the linear inch and not on meters. So if I add linear inch to meters, it would give a distorted figure, and hence that is the reason why we don't give the sales numbers in terms of meters, and we give the production number just for everybody to understand at what capacity utilization that we are working on right now. So that is the reason why. So because the welding is done on the ends of the hose, which are measured in inch and not in meters. So that gives a distorted number.
Got it. So your production number this quarter was 3.09. You said last quarter also it was similar, right? 3.09.
Yeah. So what happened in the last quarter? We got more inquiries for lower diameter of hose, and in this quarter we have got inquiries for a larger diameter of hose. So even though production might be same, but in terms of the larger sizes were sold in the last quarter much more than the previous quarter of the same quarter of the previous financial year. That's also, like I said, that we actually could have produced more, but we slightly lowered our production. The reason being is that we don't want to have excess inventory in WIP. Like I said, that we received a very good demand for the assemblies, but unfortunately we were not able to ramp up our assembly section at the same pace at which we have received the orders. So hence we didn't want to increase our WIP level to a very significant level. Hence we lowered the production to ensure that we have a seamless line for production.
Got it. And since last quarter you mentioned that you were impacted by the Red Sea issues and everything, and now this quarter your numbers are better, and you said like 8 crore further impact was there.
Yeah.
So apart from that, everything is on track now. Now the customers are giving you more orders, and you're also able to deliver on time. How are things?
Yeah. So delivery from our factory is going on time. Unfortunately, delivery reaching the customer is not happening on time. But that is something which is actually not even in our control. So I think this Red Sea crisis, I think is not going to go at least for the next few months, or at least till December. I think it's now actually a part of the life only. So like I said, approximately, like if both the Red Sea issue and the welding station, the welding capacity issue would not have been there, I think our revenues would have touched almost 100 crores. So but yes, we are working on removing those issues. Some things which are under our control. Obviously, we are working on them. Some things which are beyond our control. So we are working with our customers to see if they can do a higher stock of inventory at their warehouse, or how is it that we can reduce the dependency on, or reduce the impact of these supply chain issues. So yeah.
Got it. And anything on the increased freight cost, like who is bearing that, you or the customer?
It's a mixture of both. So especially in case of FOB, it is borne by obviously the customer. But in case of certain, orders which we have already taken under CIF, it is borne by us. So as I mentioned in my speech, approximately 81 lakh rupees of shipping cost was in addition to the regular shipping cost that we would have paid. So that is the amount that we have actually been impacted. Obviously, the overall cost is higher because some of the additional shipping burden has been borne by the customer. So it depends a lot on customer to customer, on terms to terms, on volume. So
Any rough breakup you can give about the FOB and the CIF contracts? Any rough, it is 50-50, 60-40, how is it?
Very hard to give a number, but it would range 60. So 40 would be FOB, 40-45 would be FOB approximately, and about 55 approximately would be CIF. But this is just a very ballpark figure.
Yeah, got it. And lastly, Asad, you said like Hyder also, you will be adding further you will be doing some capex, right? 18 odd crores. So if I remember correctly, I think your previous guidance on capex was around 60 odd crores. So is there any change in the overall year's guidance? And also the particular capex have done? Yeah.
60 is over the period of next, 3 to 5 years. So, 18 crores is over the next, 1 year that we have planned with regards to additional machines, additional, space, infrastructure, additional equipment. Like I said, quality labs. So, the first thing we wanted to work on is because, when we took over the company, although it was it is a very small company, but we saw the potential there, and the first thing we wanted to implement was a high quality and high tech QC lab. So we've already started on the work of on the same, because in our industry, I think the QC is the first point for any potential customer to come and visit the plant. So the first thing that they see is the QC lab. So we have already started to work on that. We have already placed orders for a few machines.
So the overall capex you see for this year is how much?
For at least for this particular financial year, it would be, I think, somewhere approximately between, I think 7 to 8 crore rupees approximately for this financial year, like from now till.
No, for the entire company, not for Idea. I'm saying for the.
For the entire company.
Yeah.
Okay, for Aeroflex. So for Aeroflex, I think for this financial year, we expect to do a total capex of the remaining year. I would say we do expect to do a total capex of about 35 to 40 crores. Till March 2025. Also, just wanted to update, I think I might have missed out on my speech, is that, we may have, our capex planned for the Bellows project, right? So, we are in a good state that, it is most likely they will be spending less than what we had budgeted for in terms of capex for the Bellows project. So I think that would be a significant advantage for the company at a lower cost of capex. Will be able to achieve our desired results.
No, so just to be clear, you said 35 crore for the remaining of the year. So how much you have done in first quarter?
We have done about 20.3 crores in the first quarter.
Okay, 20 odd crores. So around 65 crores for the full year. That is what you are.
Yeah, about 60 odd crores. Yeah, that's right.
And if any acquisition happens, that will be over and above it.
Yeah, obviously. So acquisition is not part of this capex. So yes, we are in talks with some company internationally, but I will not want to comment on that at this stage.
Sure. Thanks, Asad, and all the best.
Okay.
Yeah, thank you.
Thank you so much. Thanks a lot.
Thank you. The next question will be from the line of Prachi Sharma from AS Investors. Please go ahead.
Hi, sir. Good morning. I have a couple of questions, so I would like to take it one by one rather than going all at once. So going forward, are you planning to expand into any new geographies? And if you can give me a highlight of those regions if you are planning.
So, thank you, Prachi. So, we are exporting to almost 90 countries now, right? So our focus would be to penetrate deeper into the existing countries that we have. There are some countries, say for example, in Central Asia and in the Middle East, where especially Central Asia, where we have absolutely no presence, where there is a demand for our products, which we will be, looking to expand in this current financial year, and also to increase our presence in the Middle East region, because that is also a potential the region that we have, a very little presence right now. But we think that with the potential in the market there, I think, we can see significant results there. But obviously, US and Europe would remain our biggest markets. But these two are the new areas that we are looking at.
Sure, you mentioned, I think you're seeing some potential demand. So can you maybe quantify this demand in some sort? Like what kind of demand you expect from these regions you mentioned, say Middle East?
Yeah, so I think it will be difficult for me to give a number on the exact demand that we have. But so, like I said, Central Asia is for us, we have no presence. So it's like, starting from zero.
Okay.
Middle East, we already have some presence, but it is not significant. So that is where, we feel that we want to increase our presence in the Middle East. So difficult to quantify that, unfortunately.
Sure, no issues. My next question is that in the presentation, we have mentioned that we will be adding 3 more manufacturing lines for our composite hoses.
Correct.
So just wanted to understand how big the market is and who else is manufacturing these kind of, hoses.
So, composite hoses, is a synergy product to our to our metal hose, business, where a lot of the customers who buy, metal hose, they also buy, a composite hose and various other different types of hoses like PTFE hose and rubber hose and so on. So it is a complementary product to our products in terms of the competition. So there is no organized player of composite hoses in India. There is just one or two, extremely small, players who are manufacturing at a very, very low scale, and then they are supplying mostly in India. But we are the largest organized player for manufacturing of composite hoses in India, and we compete with the likes of a few foreign companies called Dantec, who are one of the leaders in manufacturing of composite hose. So they manufacture in the European region. They are one of our biggest, competitors. So yeah, this is about the composite market.
Sure, sir. This was very, very helpful. I'll get back in the queue in case of any other questions. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Nilesh Doshi from Green Lantern. Please go ahead.
Yeah, I had few questions from my side.
Yes,
one is on the export side, the future orders, now are we trying to move to FOB?
So what we are doing is we are working with the customer saying that, our rates will be FOB, and at present, this is the freight rate. If there is a minor fluctuation of say about 2-3% or 4%, then we'll bear the same. If there is any significant jump in the freight from here, then then either we'll bear it jointly or it will be borne by the customer. So we are working on a mixed strategy. The reason being on going completely to FOB is it actually affects our supply chain even more. I'll tell you why. Because if we move completely to FOB, right? So then what happens that we have already seen with a few customers is that then they try to get the best rate from their agents, right? And which would mean that they might, get a shipment which might be 3 weeks from now or 4 weeks from now. Now, that will, lead us to a much higher, inventory level at our factory. That also affects our entire, our production line, our dispatches and everything. So it's both pros and cons. So hence, we don't want to work exclusively on FOB because that would impact our inventory and also ultimately might impact our revenues as well. Because if some shipment is ready for shipment, but it will go after 4 weeks, so then, the revenue goes, it gets carried forward.
So if I ask it differently, are the customers expecting or accepting the new CIF rates?
So like I said, like I answered previously, right? Some customers who we have, extremely large orders and all, and who we have extremely good relations. So they sometimes accept 50% of the freight additional, and we bear the remaining 50%. In some cases, especially new customers, generally they don't bear the additional freight where we have to bear. And in case of, obviously, if some shipments are FOB, obviously, we don't bear the additional freight. It is borne by the, by 100% by the customer. So it's
so on a ballpark basis, what would be the difference between, just any particular geography you can take? Yeah.
I gave okay. So, like earlier, just given an example, Europe's freight about, say, before this issue, Europe's freight were ranging anywhere to, from 1,000 euro to 1,500 euro. And now it's gone to about 3,500 euro. And the US obviously much more than that. And the issue, one thing is the freight. The second issue is also the container availability. So there is one thing where you pay the freight and then, you get the container fast, right? Sometimes it is happening that even after, accepting the higher freight from the shipping lines, they're not able to give the containers only. That is something even beyond.
Yeah. But is it easing now? As the time passes, is it easing?
I think it's not easing. I think everybody is just now getting used to it. This is a new normal. So it's, the mindset is like, now we have to plan it in such a way that we expect there will be some delay. So, it's now starting to become like a normal course of business.
Yeah. So the second is on the metal bellows, the phase 1 expansion, phase 1 project, when are we expect to complete and start the production?
Commercial production should start by December. We have already received some of the machines. The additional machines and equipment also, some of it is planning to be received in August, some in September and some in October. So we expect in the third quarter trial production to start, and mostly by December, commercial production will start.
And what is the industry where primarily initially we would be selling these bellows?
So these industries, it includes your steel industry, the power industry, the turbine industry, ports and terminals also use bellows, construction industry, oil and gas industries, they use bellows for cryogenic applications. So almost 70 to 80% of our existing industries, use bellows in some form or the other.
And what metal we would be working in the initial phase? It will be stainless steel or all kinds of metal?
No, so all kinds of materials. So even in bellows, there are some extremely high-end materials like, Inconel, bellows. But the most primary material or the material which will give us the most business would be stainless steel.
So largely it will be import substitution for us in terms of sales?
When we supply in India, yes, it will be import substitution. Obviously, when we export, it will be, competing with the players in Europe, the players in USA.
Yeah. So my question is, in the initial phase 1, we would be more focusing on the domestic market?
No. So we would be actually focusing on the export market. Our ratio of domestic to export would more or less be in the same line as our whole business, where about, say, 80% of the business would be exports and about 20% would be domestic. As of now, what we have projected. Obviously, once we start to get the orders, things may change. But as of now, what we have projected is we'll be still focusing primarily on the export market for the bellows.
And at the full capacity, what kind of revenue we would expect from phase one?
At a full capacity level, once we reach that capacity, say in the next I think 1 to 1.5 years, we would expect a turnover from the phase one. We expect the turnover of approximately 85 to 95 crores approximately. Obviously, it depends a lot on the kind of material we use. Like if we use, for example, more of Inconel, obviously the turnover would be higher. If you use more of stainless steel, it could be in this region of 85 to 95. So, yeah.
So the question is, we have gone ahead with this project, but
yes.
Have we done any kind of pilot manufacturing or R&D manufacturing in the past to handle all these metals?
So stainless steel is actually our core metal, like as in the sense we have been
Correct.
using stainless steel, and we have also produced the hoses, made from Inconel also for some of our customers. So we already have the expertise, we already have the team to manufacture them. We have also, onboarded. So this entire metal bellows project is being led by an extremely senior person who has about 25 years of experience working for an MNC, who was into this business, based out of the UK. So they were, I would say, I will not say the pioneers, but they were one of the first companies who thought about this kind of a product for the industry, and he was working with them for almost 20 odd years. And we, and he's a person who is since the beginning, he's a person who's leading this entire project for us. So that is where the expertise comes in.
Yeah. So basically, what I'm trying to understand is that immediately after we be ready with the plant, whether a product will be acceptable or it will call for trials and qualifications and everything.
So trials and qualifications would definitely be required. Like I think I mentioned at the start of the Q&A, I think somebody answered. So I mentioned that bellows is not like a commodity product where you just start to manufacture and sell. So it requires a lot of work with the design aspect, a lot of work. So with the technical aspect. In terms of, trials, so what happens in bellows, the design is extremely important, because sometimes what happens is a bellows, like a single bellow could be actually, worth about 7 to 8 lakh rupees. So in terms of sampling, in those cases, it does not happen. It works mostly through the design aspect, because it's not possible to give up 7-8 lakh, worth of product as a sample. So hence, in bellows, the design aspect plays a very important role. The certifications also play a very important role. So as soon as we do the trial production, we immediately need to apply certification for our products, and then obviously we start to get so once we get the certification, especially large customers, we'll be able to capture them. But some of our existing customers who are already buying hoses from us, we have already started to discuss with them about bellows, that this is the project that we are entering into, and we have already started working with them on their designs of the bellows.
Right. Thanks, Asad. If I have more questions, we'll get back.
Sure. Thank you so much.
Thank you very much, ladies and gentlemen. That was the last question for today. I now hand the conference over to Mr. Asad Daud for closing comments.
Thank you so much, everyone, for the question. If in case I was not able to answer anyone's question, or if anybody of you requires anything more specific or detailed, I request you to get in touch with me or with SGA, our investor relation advisor. Thank you so much, everyone, for attending the call. Hope you all have a good week ahead.
On behalf of Aeroflex Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.